So 10:31, and we'll begin. Thank you everybody for registering for today's webinar, and welcome from Eurocham to today's webinar on tax updates during COVID-19. This is the latest and the 10th webinar that we've been offering at Eurocham, aiming to tackle some of the issues that companies may be facing during these unprecedented times. So today, I just want to first of all thank our partners, without whom this event would not be possible. One of those is DFDL, who will actually be joining us as a speaker as well today. So thank you very much to those. As a quick introduction to myself, my name is Tom Heskett. I'm the Business Services Manager at Eurocham Cambodia, and today I'll be functioning as the moderator of this call, of this webinar. My own background is previously at Emerging Markets Consulting, and now I help European companies get established in Cambodia through the services department at Eurocham. But today's content will be coming from Clint O'Connell, and I'll just give him a chance to say a few words about himself before we start.
So thanks, Tom, for the introduction. My name is Clint O'Connell. I'm a tax partner at DFDL in Cambodia. I've been in Cambodia for just over 10 years, working in the field of tax. And it's my pleasure to be presenting in this Eurocham forum today, and I hope that all of you will get something useful out of this seminar.
So Clint, thank you very much for taking the time to join us at Eurocham today. So for all participants online at the moment, I just want to explain a bit about the structure of today's webinar. It will last around 1 hour. Around 45 minutes of this will be Clint's content, and then we'll be going into a live Q&A. One thing I'd say is that if you have any questions, you will see on your platform a chat box on your bottom right. If you have any questions throughout the webinar, please type them into the chat box, and we'll either try to address them during the flow of the presentation, or we'll address them at the end. Another thing I want to address at the moment is that if the webinar experiences technical difficulties, for example, the internet drops out, the whole webinar will be recorded and will be posted on the Eurocham YouTube channel at the end. And so everybody who is a participant here today will receive the link to the webinar in full. So just in the worst case where that does happen, you know what to expect. So with that though, it's a very brief introduction. Just before going on to the content itself, a few updates on Eurocham's own activities. Eurocham is still providing the translated and summarized updates on all of the latest announcements from the Government of Cambodia. You'll find these on our latest June newsletter, and that's available on the Eurocham website. So just type in Eurocham newsletter on Google, and it will be the first thing that pops up. And just to give an idea of just the scale of some of the announcements that have been coming out, between the 8th of May and the 5th of June, there have been 37 government announcements that we've translated and summarized on the Eurocham website. So please, I'd encourage you to have a look at that website and to see some of those announcements in more detail. And indeed, Clint will be discussing some of those announcements in today's call. So with that, I'll now pass on to Clint O'Connell and the content that you came for. So participants, thank you very much. And Clint, the floor is yours.
Okay, thank you, Tom. So let's get right into it. So the topic today, of course, is tax updates during COVID-19. And as Tom mentioned, out of the 37 updates that have been passed by the government during this time in Cambodia, a fair percentage of those relate to tax. And we won't cover all of those updates today, but we have picked out which ones we hope are the most interesting and relevant for you to cover. So if we look at the contents of the topics we'll be discussing today, you'll see that most of the tax updates during this COVID-19 period have been sector specific. So I'll briefly run through the various tax updates for the real estate, tourism, aviation, garment, and financial institution sectors. And then we will conclude with some general tax updates which apply to all sectors in Cambodia. So the first update we will discuss today is with respect to the real estate sector in Cambodia and the application of the 4% stamp duty. So just to give you a brief background, the 4% stamp duty applies on the transfer of land, typically hard title land and property on top of that land. And by law, the 4% stamp duty is payable by the purchaser, and the 4% is normally based on either the hire of the purchase price of the land and building, or by using the fixed rates which the tax department has issued in the last few years. Now, this particular update provides that the transfer of residential property that's valued at less than USD $70,000 will be exempted from the 4% stamp duty. So that's supposed to encourage the transfer or sale of residential property between the period of February 2020 and January 2021. To qualify for this exemption, the developer must be registered with the Ministry of Economy and Finance, and the transfer of the property must be supported with a valid sale and purchase agreement. Okay, moving on to the tourism sector. It seems like quite a long time ago now that these incentives came into effect, but going back to March of this year, the government issued the tax incentives for tax-registered hotels, guest houses, restaurants, and travel agents that conducted or are conducting business activities in Phnom Penh, Siem Reap, Chinookville, Kep, Kampot, Bavet, and Poi Phet. And this exemption applies to the monthly taxes of these taxpayers. And originally the exemption was from March 2020 to May 2020. But late last month, the exemption was extended an additional 2 months to cover June 2020 and July 2020. And to explain how this works, effectively, if you are a taxpayer, say, for example, a hotel who is conducting business in, for example, Phnom Penh, when you file your monthly tax returns, which include withholding tax, VAT, tax on salary, prepayment of tax on income, you would still complete the monthly tax returns and you would still calculate the taxes which would normally be payable. But the taxpayer would not be required to make the payment. The taxpayer still would be required to file the monthly tax returns, but they would not be able to they would not make the payment. Just to give some additional clarification on that, because we have got some queries from taxpayers on the mechanisms as to how this would work. And we understand, for example, that some taxpayers have heard from tax officials that the savings, for example, on salaries, tax on salary, that they should be passed on to the employee as opposed to being kept by the taxpayer. It's our understanding that the objective behind this exemption is to help with the cash flow of the underlying taxpayer. So if you have an employee who is on a gross monthly salary, the employee would still receive their salary after tax, after the tax on salary has been deducted, but the employer would not be required to make that tax on salary payment to the tax department. Now, if the employer still wants to pass on that saving to the employee, there's nothing stopping the employer to do that, but the point is that it's not compulsory for the employer to pass on that tax on salary savings to the employee.
Just before we move on to the next slide, I can see a few people are experiencing audio difficulties. For those people, we apologize for the inconvenience, but there will be the full recording on the YouTube channel. So any audio issues you're facing now, you'll be able to hear the full webinar on the YouTube channel. Right, sorry.
Okay, thank you. So the other exemptions aside from the monthly taxes for these affected taxpayers in these particular provinces include the ability to pay the annual 2019 tax on income payment for an installment basis up to November of 2020, and probably more interesting and more which is more of substance to these taxpayers is that the tax department will not conduct a comprehensive tax audit for those affected taxpayers. Now, the issue here is that when the original update was issued for the tax exemptions, it was only specific to those taxpayers in the Siem Reap province. It wasn't until later that the exemption was extended to cover the other provinces, including Phnom Penh. So it still is not clear yet whether the exemption from the comprehensive tax audit only applies to those taxpayers in Siem Reap, or whether it also applies to those taxpayers in the other provinces that were later mentioned in the tax notification. We would hope that common sense prevails and that the comprehensive tax audit exemption extends to all taxpayers in all of those provinces that I mentioned at the start of this slide. Okay, moving on to the tourism sector, or staying with the tourism sector, sorry. There was also an additional government letter which allowed or provided that the Cambodian government would provide 20% of the minimum wage for the 2020 year, the minimum wage being USD $190 per month, to those employees that are affected by a suspension of their employment or due to the cessation of business operations for hotels, guest houses, restaurants, and travel agents. When this update was originally issued, it was a requirement that to obtain this benefit, that the employees would have had to attend a training course organized by the Ministry of Tourism. That requirement has now been removed, so there's now no need to attend the compulsory training course. There was also, when the original notification came out, mention of a requirement for the employers of those affected employees to also make contributions, which now has been clarified that employers who are employers of these affected employees are only required to make those contributions that they can economically make. So if the employer is not in a cash flow position to assist above and beyond the 20% minimum that's been paid by the government, there is no compulsory requirement for the employer to contribute additional salary on top of that 20% minimum. Moving on to the aviation sector, fairly limited tax relief for the aviation sector in Cambodia, only with respect to the 1% prepayment of tax on income, which is a monthly prepayment of your annual tax on income liability, which is based on the monthly turnover for the aviation entities from March to July, which, when you think about it, you would expect that there would be very little monthly turnover for aviation or for airlines during this period. So practically speaking, this tax relief is not going to be of much value to most aviation entities operated in Cambodia during the period from March to July this year. There's also a deadline of 6 months for the payment of the annual aviation fees for airline entities in Cambodia to the Civil Aviation Authority. Now, the government sector, which of course, as most of you will know, has been quite severely hit by both the EBA update and also COVID-19. There is a specific tax on income relief, which is focused more so on the impact of EBA than with respect to COVID-19. Effectively, how this works is that if a garment factory in Cambodia that's exporting to a European country has been affected by the abolishment of the exemption of export duties under the EBA update, the taxpayer in Cambodia, the garment factory, will be allowed a tax on income exemption, which is calculated on the basis of the amount of the affected exports. Those are the exports which are now being subject to export duty versus the garment factory's total exports for the year. So if the amount of affected exports if the formula results in a total which is having an effect of 20% to 39%, then the tax relief would be a 50% tax on income exemption for 2020. If the effect of the affected exports over total exports results in a 40% to 100% result, then there will be 100% exemption for tax on income for textile and garment enterprises in 2020. Also, with respect to the garment sector, not specifically relating to tax, but when we initially had this issue back in February relating to the delay of goods, particularly coming from China because of the lockdown in China, the Customs and Excise Department made this amendment to try and expedite the procedural requirements once those goods land in Cambodia, whereby those products could qualify for what we call a green lane, which means that there would be, practically speaking, no checks at the customs entry point in Cambodia to allow those materials to get to the factories more quickly. But the Excise Department would still reserve the right to carry out a post-clearance audit in the years to come. So there still is important requirement for these taxpayers to maintain the appropriate documentation and make sure that they are declaring the appropriate customs values when they are importing the products into Cambodia. This is a relatively recent update with respect to financial institutions, and it came about because of lobbying by the Cambodia Chamber of Commerce to the Cambodian government to try and provide some relief or to try and encourage the local lending of Cambodian financial institutions to businesses that need money during this time of COVID-19. And what this update provides is that for banks and financial institutions in Cambodia that obtain new loans in 2020, the withholding tax rate, which would typically be 14% on interest to non-resident or 15% to interest to resident lenders, is reduced to 5% for 2020 and is reduced to 10% for 2021, with the default withholding tax rate coming back in 2022. We've got a question about the withholding tax reduced from 14% to 10%. I think that refers to the next slide. So I'll just go through the next slide first and then address that question. So for those banks and financial institutions in Cambodia that have existing loans, the withholding tax rate is reduced down to 10%. So again, if you had a loan with a non-resident lender, putting aside a tax reduction under a double tax agreement, the standard withholding tax rate on the interest payable would be 14%. And the question asked is, when does that reduction effectively come into play? The letter from the GDT says that it commences was dated 26th of May 2020. So we would expect that the reduction to 10% should take effect from the May 2020 with respect to the interest paid to by banks and financial institutions to overseas lenders. Sorry. Now we move on now to the general tax updates, which are not so much industry specific, but across the board. Some of these I think most of you will be aware of, but I'll just go through them again quickly for completeness. So the monthly tax on salary rates for employees were modified. The first tier, which is subject to 0%, was modified from $300 USD up to $325 USD, and that was effective from I believe it was February 2020, which means that for all employees, the first $325 of their monthly salary is now exempted from any tax with respect to the tax on salary rates. What has been discussed a lot in recent months and last year as well was the impact of seniority payments, which most of you know there were two types of payments. One payment that was relating to the back payments of seniority pay, and one that was relating to the ongoing obligation of employers to pay seniority payments. So I won't go too much into the labour issues, but focus more so on the tax issues. One of the big tax issues that originally arose with the seniority payments when they were updated was that the GDT stated that only seniority payments paid to local Cambodian employees would be exempted from tax on salary. And there was some feedback from the private sector given to the tax authority, which led them to update this obligation to say that the exemption on the seniority payments with respect to tax on salary, it doesn't now relate to whether you are a Cambodian citizen or whether you are an expat. It completely relates to the threshold of the seniority payment that you receive. So what, from a tax perspective, what they are now saying is that seniority payments, these are the ongoing payments, up to a level of 4 million Khmer Real on an annual basis, are now exempted from tax on salary. And that applies both to Cambodian national employees and also to expatriate employees as well. And this 4 million Khmer Real exemption is split into the due dates for the seniority payments, those due dates being June and September of each year. So for the first due date of June, the allowable amount of seniority payment that would not be exempted to tax on salary would be Khmer Real 2 million, which is approximately USD $250. So any seniority payment that's made in excess of that Khmer Real 2 million would be subject to the monthly tax on salary rates. Now, the good news is that the seniority payments for 2020 have been completely postponed until 2021. So there is now no obligation on employers in 2020 to make any seniority payments to their employees. And I think there are some questions that we will discuss during the Q&A session about what may happen if an employer still wants to make a voluntary payment later this year. Okay, then we move on to a recent update in May from the Tax Department, or from the Ministry of Economy and Finance, which relates to the application of the 10% VAT on the disposal of business asset. Now, up until this regulation was passed, if a registered taxpayer in Cambodia was to sell one of its assets to somebody else, it would normally, or it would be required to charge 10% VAT on the sale of that asset. Now, what this Prakas 11581 does, that was dated early last month, it provides an exemption with respect to the obligation to charge 10% VAT on an asset disposal if certain criteria have been met. So say, for example, if you are a registered taxpayer in Cambodia and you acquire an asset from your supplier that is not tax registered, which means that supplier would not have charged you VAT at the time of the purchase. If you were to subsequently sell that asset, you would now not be required to charge 10% VAT on the sale, on the basis that VAT was not paid on the original purchase by you from the supplier. Other exemptions include if the asset on your books has been completely written down, which means that the depreciation taken on the asset has reduced the value, the tax value, down to zero. When you dispose of the asset, you also are not required to charge VAT with respect to any consideration that you receive for the asset. Those really are the main points. It's still important to note that if you dispose of an asset and you still make a gain, which typically would be the consideration that you receive for the asset is higher than the adjusted tax value of the asset, that gain would still be subject to the 20% tax on income. So you would still include it as other income in your annual tax on income declaration.
So just before moving on, so I can see we're getting a lot of questions on seniority payments. So we will have a section of the Q&A dedicated to that at the end. So thank you for the questions that have come in on that topic.
Okay, so e-filing, again, to give some background, because of COVID-19, the tax department brought forward what we would call a hybrid e-filing mechanism, because it wanted to reduce the contact with taxpayers coming to the tax branches during that time. So from February this year up till June, there was what we call this hybrid e-tax service, where taxpayers were able to scan their tax declarations and submit to the tax department via the e-tax service, which required taxpayers to register for, with the proviso being that even though you've completed the e-tax service, taxpayers were still obliged to submit the original returns to the GDT no later than 3 months following the e-tax submission. Now, from June, obviously from this month onward, taxpayers must comply with the e-filing system, which has been introduced by the tax department, and there's been a fairly comprehensive update with templates and instructions issued by the tax authority. So this is going to cause, we think, a few teething problems, particularly with issues such as data entry, internet stability, and also teething problems with the e-filing site. So it's something which we're not going to go into too much detail here, but I would encourage you to speak to your tax advisor if you want further detail, or you can call the GDT helpline or contact them via their email on Facebook or their website if you want to get more information about the practicality of moving to this new e-filing system. There's also been a sub-decree issued by the Ministry of Economy and Finance with respect to penalties relating to accounting and audit requirements. And this is governed by the National Accounting Council of Cambodia. And as you can see, there are a number of requirements now in law. They were in law before, but what was missing before was the penalty that would apply to a taxpayer if they didn't comply with these obligations. So if we go through the obligations, you are required to obtain approval from the NAC and GDT, for example, if you want to change your accounting period. So typically that would happen if your overseas parent has a non-standard filing date of 30 June as opposed to 31 December, which is the standard tax year in Cambodia. You can't just simply change your accounts in Cambodia to a June date unless you have obtained the approval from the National Accounting Council and the GDT. And the penalty for non-compliance is now USD $500 for a large taxpayer and $375 for a medium taxpayer. In addition, failure to maintain your accounting records and financial reports in Khmer language, use of any other currency besides Khmer Real with respect to your accounting records and financial reports, they will also attract a penalty of $500. We're not too sure yet as to which department within the MEF will police this, but we suspect that it may come up during the course of a tax audit, that the tax auditor, when they request for the standard supporting documentation, which includes financial reports, accounting records, if that documentation is not provided in Khmer language or the currency is not in Khmer Real, it may well be likely that the tax auditor adds these penalties as part of a tax reassessment. And I guess another point to add on that, it's not part of the topics today, but it should be noted that during the recent months, there has been a significant increase across the board for tax audits in Cambodia. For our own clients, we see this every day, more and more tax audit activity, which was more than what had occurred prior to COVID-19. So there's even more obligation or even more importance for taxpayers to make sure that they are maintaining documentation and making sure the taxes are being paid. It can cause issues, for example, if your accountant is stuck overseas or you can't obtain documentation on time because of restrictions of movement, in which case the best policy is to communicate this formally with the tax auditor as soon as possible to ask for an extension of time with respect to the provision of documentation, for example. And if you have questions on that, I'm happy to address it during the Q&A session as well. And just to finish off today on the slides was the other alternative tax approaches that you could look as a taxpayer in Cambodia to deal with your tax issues during this time. Because as you would see from the earlier slides, the tax relief that has been provided to date is firstly quite industry specific. It's also in some cases specific to certain provinces. And we know that for a number of industries which do not come under these current exemptions, they are also suffering cash flow issues with respect to the impact of COVID-19. So what can these taxpayers do? Well, some things that you could look at doing proactively is to write a submission letter to the tax department requesting for some relief, and that can come in the way of a waiver of tax payment, delay of tax payment, or a request of your making your monthly taxes or annual taxes an installment rather than as a lump sum. Now, to be very open with you, it's probably very unlikely that you're ever going to get a waiver of tax payment agreement from the tax department on an ad hoc basis. But you are much more likely to obtain a formal response with respect to a request for a payment by installment or a delay of tax payment from the tax department. And we have seen this ourselves firsthand with our clients. But you would typically need to have some supporting documentation to evidence that you are in a cash flow situation whereby it's difficult to make your monthly or annual tax payments. So you would need to look at providing bank statements or financial statements to support that application. And do bear in mind that it can take some time for the tax department to reply to these requests. So if you're thinking about doing this, I would suggest to do it sooner rather than later. So a quick question, the deadline for annual filing. So for a taxpayer who's following the standard tax on income year, which is 31 December, the calendar year, the annual filing would be 3 months, so after that date. So the annual filing of the TOI return is the 31st of March of the following year. And the audited reports, they typically need to be submitted at the same time as the TOI return. But under the financial regulations in Cambodia, I understand the deadline for the audited reports are June of the following year. Now, some other approaches, and this is for you to consider both internally, if you are if you are a CFO or part of the finance team of a business, and some of these are perhaps a bit of a wish list as well. So if we start with VAT. Now, the issue, I think, as most of you know with VAT, is that if you issue a VAT invoice to your customer, you are required to account for the VAT in the month that invoice is issued, but it can take some time for you to actually receive the payment from your customer, particularly now during COVID-19. So maybe if you were to write into the tax department asking for some type of tax relief, perhaps one option would be to declare your VAT output on a cash basis, which means that you only account for your VAT output on sales when you actually receive the payment from the customer, as opposed to now where it's on a accruals basis, which is the earlier of when you invoice or when you receive payment. Another tactic which a number of our clients are employing now, and this really again comes to cash flow and cash security, is requesting an advance deposit from your clients prior to undertaking the work. The idea being that at least it will give you, the business, some security that you have some of the amount up front, as opposed to a client defaulting on the entire payment after you have completed the work at a later date. With respect to withholding taxes, it's important to note that under the tax regulations, the payment of withholding tax occurs at the earlier of when you expense a transaction, like a lease payment or interest, for example, as opposed to when you physically pay. So maintaining or looking at your accounting during this time is also very important. For example, if you have been given some type of lease reduction or lease holiday from your landlord, I believe now there are some changes under IFRS 16 as to how you can record for accounting purposes the lease payment. But you need to bear in mind that how you accrue these expenses will also dictate at what time you have to pay the withholding tax as well, which also adds to your cash flow issues if you are not prepared for this. From a tax update perspective, the tax on income PRACA that was issued in late February this year finally provided a confirmation or clarification that if you are a taxpayer in Cambodia and you receive an invoice for a lease payment from another tax registered taxpayer, you are no longer required to withhold 10% withholding tax, which I think is a welcome relief for a number of taxpayers, because there was always this issue before about why do I still have to withhold 10% when the landlord is already registered for tax and issuing a VAT invoice for the lease payments. So that has now been clarified. The tax on income PRACA also has provided that if you are dealing with a non-registered supplier in Cambodia and the non-registered supplier issues you an invoice with a value that's less than Khmer Real 50,000, that there is also withholding tax exemption on those payments as well. So again, this is also useful to know. We're not sure yet. We've heard stories about or feedback from clients asking, well, can I, if I have a service agreement for $50, can I break that up into 20 invoices so that each of those invoices falls under 50,000 Khmer Real, and therefore I would be exempted from withholding tax? I think there has to be some common sense applied to this exemption, and if the tax auditor believes that you are deliberately trying to avoid the withholding tax by this type of artificial arrangement, it would be likely that they reassess withholding tax in a future tax audit. Moving on to transfer pricing, and these again are very high level comments, but particularly when you are dealing with a related party, be it a landlord or a lender who's providing a shareholder loan, for example, if they provide some type of holiday for interest, for example, or for lease payments, you will still need to factor in the transfer pricing obligation to maintain a arm's length interest rate or an arm's length lease payment. So we would suggest that you would want to carefully document be it a lease holiday or an interest holiday, and carefully document the reasons why this was provided, so that when you are audited in future years, you can provide support to the tax officers who may try and argue that the interest holiday or the lease holiday does not, strictly speaking, equal a arm's length amount under Cambodia's transfer pricing regulations. Okay, so that's the bulk of the slides. I'll hand over to Tom now we can go through the Q&A session.
Yeah, so Clint, thank you very much for the presentation. I know that we have 100 participants on this call at the moment, so I know that not everybody will have been able to hear everything at all times. So again, apologies for that, but the full recording will be on YouTube. And so any parts that you cannot hear clearly now, you'll be able to hear clearly on the YouTube link. Another thing I want to say before going into the Q&A is that we've had a lot of questions. We may not be able to address all of them during this webinar, but if there's a specific question, a specific technical question that's not answered during the webinar, please type it under the YouTube link on the video, and we'll hope to we'll try to address it on there. Just before diving into the Q&A as well, we had one question about the translations of announcements. So there was one on the 8th of June. So EuroCham's latest announcements were posted from the 5th of June. So that one on the 8th of June will be available on the EuroCham website probably by the end of this week. We'll continue that process. So to dive into the Q&A, and thank you everybody for your detailed questions. I think I've tried to categorize them into three main sections: seniority payment, e-filing, and tax exemptions. But again, we won't be able to get through all of them. But to go on to the topic that we had the most questions for, seniority payment, Clint, my first question would be, I suppose, what are the tax implications of seniority payment being postponed? And for those companies who can pay their seniority payment this year, who are not facing cash flow issues, would you recommend that they do so?
Yeah, that's an interesting question, and it's really one that companies or businesses in Cambodia would need to address on a case-by-case basis. But if you are in a position to pay the seniority payment this year in 2020, even though you are not obliged to, you would still, of course, be eligible for this tax exemption or this tax threshold of the Khmer Real, was it 4 million? So I guess my response would be, do not think that if you do make the voluntary payment this year that you would miss out on that $4 million threshold. It will still apply for this year. Equally, if you don't pay this year and you wait till next year, the deferment of the 2020 seniority payments is simply that, a deferment, which means that in theory there would be two payments made in 2021. The payment that you would normally have been required to make anyway, plus the catch-up for 2020. Now, you would assume that if that was the case, then the threshold would be doubled from 4 million Khmer Real to 8 million Khmer Real to take into account those two payments, but that hasn't been made clear yet. So yeah, if you are in a position to pay in 2020, then there's nothing from a tax perspective that would be an impediment for you making that payment this year.
Perfect. So in answer to, I think that answered a few questions. So that means that seniority 2020 is not cancelled. So one person's question was, is seniority 2020 cancelled? And so no, it's not cancelled. It's deferred to 2021. Yeah,
and just to be clear on that point, and again, I'm not. I want to caveat that I'm not a specialist on the seniority payments. It's more of a labour team at the FDL. But I do know that these seniority payments, there are two types. There are the payments for the back years, and there's the ongoing payments that are required to be made, the current payments, if you like. Now, the back year payments, some time ago, they were already postponed to 2021 anyway. And we're still not entirely sure, I believe, if they may be postponed further. But the ongoing or the current seniority payments, which were supposed to continue in 2020, those are the payments that have been deferred or postponed to 2021.
Okay, perfect. So hopefully that answers your question. The last one will just be on the seniority section. Just a very simple question: who should participants submit their letter to if they still wish to pay seniority in 2020?
I think
which organisation?
Yeah, again, if you are concerned about the ability to obtain that 4 million Khmer Real threshold for your employees if you make the payment in 2020, I would suggest that you don't need to be concerned or to submit a letter to clarify. But if you want to, you would be submitting that letter to the General Department of Taxation if you wanted to receive formal confirmation that if you were to pay the seniority payment in 2020, that you would still be eligible for that 4 million Khmer Real threshold per employee.
Okay. Okay, thank you. So I think that's all of the questions on seniority payment so far. The next section we'll move on to is, but if there are any other questions, please ask them now on seniority. The next question we'll move on to is tax exemptions. So I guess the first question is just the Royal Government has made a number of tax exemptions, a number of attempts to alleviate the effects of COVID-19 on businesses. But I suppose in the opinion of yourself, Clint, and DFDR, are these, how effective do you think these exemptions will be in helping these companies?
Yeah, well, I think a couple of points here. I mean, I think most of the audience, when you watch the social media and the news, that you'll see overseas countries giving quite generous concession or tax packages to try and stimulate the economy or to try and help businesses survive. I think from a starting point, Cambodia, it's the government is fairly limited as to what it can actually do to proactively provide real dollar assistance to businesses here. It's just unfortunately that's how it is here. But I think that the Cambodian government has been particularly responsive, particularly with the tourism sector, providing these monthly exemption on monthly taxes. There's not much more that they could do. I would hope that if the crisis continues, that potentially those monthly tax exemptions would be extended from July until additional months. But I'm sure that the government is watching that carefully and will make the appropriate adjustments at the appropriate time.
Indeed. Okay, so that was one of the questions. Based on government news, the tourism sector will be able to receive additional exemption until July 2020. So I think that question's been answered there. So another of the questions was to do with the withholding tax reduction from 14 to 20%, and whether that was applicable from this month onwards. I think that's already been covered.
Yeah, to 10%.
And one question we had was in regards to, maybe this may be a bit too specific, but would the tax on income exemption apply for embellishment companies as well? And so I had to Google embellishment companies myself in terms of decorating companies. I don't know if those would fall under the remit of the tourism sector. But
yeah, I think I'm not sure if they're referring to the EBA or because the tax on income. Okay, there were a couple of tax income exemptions. One was the ability to pay your tax in installments for the 2019 tax on income year, or the other was with respect to the textile industry that were affected by EBA. But I think potentially this one comes under the last few slides, which is that if you don't fall neatly under one of those categories and you still are suffering or having cash flow issues, the best thing to do would be to draft a letter to the tax authority outlining the impact to your business and requesting some type of tax relief, be it a deferral or the ability to pay your taxes in installments.
Okay, perfect. Thank you very much, Clint. Okay, so that would be the last question in terms of exemptions. But again, if there are others, please type them in the chat box now. The last question will just be to do with e-filing, because I know we had a number of different questions under that topic. So I'll start with just one. Is it already possible to do monthly tax formalities entirely online, including the payments and documents uploading, without having to physically go to the tax office?
I have to be very honest here. For me personally, I have very little experience with the e-filing system. It's my colleagues and my team that do this work. But the feedback I get from them is that it's a little bit difficult now at the moment to input the data. I believe it can be quite time consuming, and potentially the format or the internet may be causing issues. So my tentative answer would be I believe it is possible, but I believe that there are a number of teething problems associated with the e-filing system.
Okay. So, I mean, I think that question actually neatly goes on to a question I have as well. COVID-19 has obviously accelerated a number of trends across the world, but specifically for tax in Cambodia, do you see COVID-19 accelerating any trends in regards to the tax regime in Cambodia? One of those might indeed be moving more online.
Yeah, I mean, if we look at, or of course we just mentioned e-filing, and that's the way that all governments are really going across all nations, developed countries, and now Cambodia moving to an e-filing system to try and reduce the contact and the compliance burden. But even in recent months, we've seen with tax audits a more of a willingness of the tax auditors to have meetings online and for documentation to be submitted online as well with respect to tax audits. So I think, yeah, this situation with COVID has definitely accelerated the online mechanisms that are used by taxpayers in Cambodia, which I think is a good thing, because you don't want to spend a lot of time, administrative time, dealing with your tax compliance issues.
Okay.
But I think you also mentioned about the tax updates, which may have been accelerated. I think one of the topics which was quite interesting to a number of people here was the introduction of a capital gains regime in Cambodia, and there was some indication that this was being rolled out when some changes were made to the tax on income laws, which contemplated capital gains on sales of shares in Cambodian companies on a very limited basis. But what we did know is that there was going to be a rollout over the coming years of a capital gains tax regime that wouldn't just apply to registered taxpayers in Cambodia, but would also apply to individuals in Cambodia as well. And the groundwork has already been laid out in the tax regulations, and all that was pending was a implementation regulation, be it a sub-decree or a prakar, to provide the detail as to how the capital gains tax would be collected and calculated, etc. Now, that was supposed to be rolled out starting from this year. Whether that will be delayed because of of what's happening now, it may well be that it doesn't happen until later this year, or maybe even next year, which will probably be of some relief to a number of people who own land or property in Cambodia.
Yeah, interesting. So a few trends that are likely to be accelerated or postponed in some cases.
Correct.
Okay, so for everybody, that brings us to our hour mark now. I know that we have not been able to address every single question, but for any technical questions that have not been addressed, again, we will be sending out the YouTube link to everybody who is registered for this. And so if any question has not been answered, please type it under the YouTube video and we'll try to get back to you there. From us, I'll just put on our video very briefly so we can say good. So myself and Clint. But thank you very much, everybody, for joining our webinar today. Thank you for being an attentive audience and active, asking questions. And I have to say thank you very much to our presenter this week, Clint O'Connell.
My pleasure, and thank you, Eurochem, for having me, and thank you, audience, for listening.
Okay, thank you very much, everybody, and we hope to see you at the next Eurochem webinar, which will be on supply chains, and that will be held on the 17th of June next week. So thank you very much, everybody, and have a great day ahead. Goodbye.